Hello and welcome. My name is Dominic Frisby and today's piece is called The Shadow Banning of Bitcoin. Legacy finance is no better than legacy media. So a couple of weeks ago, I was listening to Merrin Talks Money, the podcast. My old boss and great friend is the host, Merrin Somerset Webb, and she was discussing portfolio allocation, which assets should make up the 40 and a 60-40 bond-to-equity portfolio, with Natalia Lipicana, who is Executive Director at JP Morgan. And Merrin said, should Bitcoin be one of the assets to include, alongside gold? And Lipicana, who until then had spoken widely, fluently and knowledgeably about a range of subjects, suddenly stonewalled. We don't cover it, so we can't talk about it, she said. And there was an awkward pause. Merrin laughed. At all? No, said Lipicana. And there was another pause. OK, says Merrin, totally understand. And she changed the subject. Now that is a symptom of something much bigger that has been at play throughout the institutional world, and not just in the UK, since the emergence of Bitcoin and other cryptocurrencies. They have been shadow banned. Now, we know, of course, about the UK's Financial Conduct Authority, the FCA, how its regulations went against the pronouncements of various chancellors and how it effectively excluded UK citizens from the sector. Something similar has long been happening at the institutional level. Most private banks will not accept Bitcoin ETF orders for their clients, despite being able to deal with elective professionals. A fund manager friend of mine told me he prefers to stay anonymous. This applies in countries where there is no ban, because the bank will have links to London. Even in the US, the traditional institutions will ban Bitcoin internally. So if you look at this graphic, you will see a list of the biggest holders of the iShares Gold ETF. And many of banking's biggest names are there. Bank of America, Fidelity, FMR is Fidelity, Morgan Stanley, big names. Now if you look at a list of the iShares Bitcoin ETF, its biggest holders, obviously Goldman Sachs is a big name, but Brevan Howard, Millennium Management, Avenir, Symmetry, SIG Holdings. There is nothing like the same institutional weight. Goldman and Morgan Stanley are there, but they're market making on behalf of hedge fund clients. Can you see the difference in the calibre of the names on those two lists? Lipicana probably feels she might get the sack if she comments on Bitcoin. My fund manager friend continues. So she doesn't. You know my saying, a bubble is a bull market in which you don't have a position. For years now, banks have been talking their clients away from this sector, often using that argument. It's a bubble, it's a Ponzi scheme. And this predates the ETFs by as much as 10 years. Wall Street and the city do not like Bitcoin because they did not get there first. Smelly private investors did, drug dealers, computer nerds, and they missed out on this epic opportunity, and rather than embrace it, they ignore it. They don't control it. They can't manipulate it. Don't talk about Bitcoin. Perhaps it'll go away. Well, it hasn't, and it won't. It is here to stay. And now, with the emergence of both the ETFs and the Bitcoin treasury companies, Bitcoin is edging its way further and further into the financial mainstream. You get Bitcoin at the price you deserve, runs the saying. Ain't it so? What this means for investors is that there is a huge wall of institutional money that is still to come into the sector. It will eventually. Bitcoin is the most technologically advanced money in history. Now that real estate is gone as a vehicle to protect against currency debasement, too highly legislated, too many taxes, the need for an effective savings vehicle is only greater. Bitcoin is the best savings vehicle there is. Very low maintenance. I love gold, you know I do. I think it has an enormous strategic role to play in the coming years and should play a part in every portfolio. But Bitcoin appreciates by more. It beats stocks, it beats bonds, it beats commodities. But JP Morgan would rather not comment. Thanks very much for watching. Please subscribe to the channel. Don't forget my brilliant book about Bitcoin. I'll put a link to it in the comments if you want to learn more about the space. There's also my new book coming out on August the 28th. But once again, thanks for watching. Please subscribe, please like, please share, please comment, all that. Until next time, goodbye.